World War I, as told in classrooms, often centers on assassination, alliances, and armies. But a deeper look at the financial records from 1914 reveals a crisis that history books tend to overlook. Europe's banking system was already collapsing under its own weight, long before the first shots were fired. In July 1914, London, the heart of global finance, was paralyzed. Markets froze, share prices plummeted, and depositors couldn't access their money. The London Stock Exchange shut down for 5 months. This wasn't isolated. Around 50 countries faced simultaneous financial panic. Bank runs spread, stock markets crashed worldwide, and a decades-old system was unraveling. The collapse had been building since 1913, well before the Archduke's assassination. Behind the polished doors of banks, executives were scrambling. Credit markets in London, Paris, and Berlin had been seizing up for months. Reserve ratios had fallen to dangerous levels. Major institutions were operating on the thinnest of margins, one bad day away from failure. Gold, the bedrock of the system, was being hoarded by central banks, creating a liquidity drought. Under the gold standard, banks couldn't print money to save themselves. Single panic could trigger a chain reaction of collapse. Then, in August 1914, something remarkable happened. War was declared. Overnight, the banking system on the brink of death was rescued. Gold requirements vanished. Governments flooded banks with guarantees. The crisis that had been brewing for years was instantly blamed on the war, not on decades of reckless banking. What if the war wasn't a disruption to finance, but its salvation? The trap: 4 decades of reckless growth between 1870 and 1913. European banks expanded deposits by roughly 400%, while gold reserves grew by only 80%. This imbalance created a ticking time bomb. By 1913, the system was at its breaking point. Each bank's survival depended on every other bank remaining solvent, a house of cards waiting to fall. Massive loans to South American governments were failing. Argentina had already defaulted in 1890. The Ottoman Empire's debt crisis was spreading. Colonial ventures in Africa were bleeding money. At home, property bubbles in London and Paris had inflated wildly. Industrial loans to railroads and factories were overexposed. Consumer credit had expanded with little collateral. The gold standard made it all worse. Banks couldn't create money to stop a run. Any loss of public confidence meant certain collapse. By 1913, the panic was real if hidden. The Bank of England held emergency meetings. Banking dynasties like the Rothschilds and J.P. Morgan were coordinating behind the scenes. Warning signs were everywhere. Interbank lending rates spiked. Institutions quietly dumped bad assets, and insurance companies refused to underwrite certain bank bonds. Newspapers, often owned or influenced by banks, suppressed bad news. It was a coordinated effort to maintain confidence while preparing for disaster. Bankers knew a single major panic or default would trigger an unstoppable collapse. They needed either a massive distraction or a system reset. They got both when the war began. War as a rescue operation. The outbreak of war in August 1914 provided the perfect escape. Within days, the rules were suspended. The gold standard was abandoned. Banks no longer had to redeem paper for gold. Stock exchanges closed for months, preventing panic selling of bank shares. Debt moratoria were declared. Failing loans were frozen instead of called due. Government guarantees flooded the banking sector. In Britain, the Currency and Banknotes Act of 1914 was passed the day after war was declared. The money supply exploded. Failed colonial loans were reframed as patriotic investments. Illiquidity became supporting the war effort. Decades of mismanagement were blamed on the emergency. Most importantly, governments became captive borrowers. Nations needed huge loans to fund the war, and banks were the only source. This reversed the power dynamic. Governments couldn't let banks fail, because losing their lenders meant losing the war. The great balance sheet laundering. While generals moved troops, Bankers executed the largest balance sheet cleanse in modern history. Banks held billions in bad private debt, failed railroads, speculative real estate, doomed colonial projects. Their solution? Swap risky private loans for new government war bonds. Risk shifted from bank balance sheets where shareholders would bear losses to government ledgers where taxpayers would carry the burden for generations. Deutsche Bank's failing Ottoman railway loans became German war bonds. British banks converted loss-making South American debt into empire defense financing. French banks transformed worthless Russian loans into Allied obligations. The British government alone injected roughly 9% of GDP into banks through various schemes. Banks emerged with cleaner balance sheets than they'd had in decades. The cost was borne by future taxpayers and savers who watched inflation destroy their purchasing power. The Federal Reserve, a well-timed solution in America. The Federal Reserve Act was passed in December 1913. By August 1914, just as war demanded massive lending, the Fed was operational. Its creators had deep ties to European banking circles experiencing the crisis. The Fed provided what European banks lacked. An elastic currency money supply could expand without gold backing, a lender of last resort, and a discount window for troubled assets. Despite U.S. neutrality, the Fed immediately coordinated loans to Britain and France. By 1917, American banks held so much Allied debt that an Allied loss would have meant catastrophic U.S. bank failures. The war had proven the Fed's value. The permanent transformation by the war's end in 1918, the banking system was unrecognizable from its pre-war state. Institutions that should have failed now dominated governments. A wave of consolidation created monopolized Britons. 38 major banks shrank to the Big Five. The power relationship flipped. Banks now dictated terms to governments, demanding austerity, controlling reparations, and directing reconstruction loans. What was sold as temporary emergency measures became permanent. The gold standard was never fully restored. Government debt remained at wartime levels. Central bank independence often meant banker control of policy. Too big to fail was cemented. The winners were clear. J.P. Morgan's assets doubled. The Big Five British banks controlled finance for generations. Federal Reserve member banks tripled their deposits. The losers were ordinary citizens, small banks, and nations left permanently indebted to a system that had been on the verge of collapse. A repeating pattern, the 1914 playbook, established a template that repeats in every major crisis. 1914. War emergency gives gold standard suspended, gives bank bailouts, gives permanent system expansion. 2008. Financial crisis gives TARP bailouts, gives quantitative easing, gives bigger, stronger banks. 2020. Pandemic gives unlimited Fed lending, gives trillions in support, gives asset inflation, transferring wealth upward. The mechanisms are identical. Suspend normal rules during an emergency. Transfer private losses to the public balance sheet, expand central bank powers permanently, and consolidate the industry so the largest institutions emerge even more powerful. The lesson for today's banking system faces the same structural vulnerabilities as in 1913, but on a far larger scale. Over-leveraging, interconnected fragility, and derivatives exposure measured in hundreds of trillions signal another reset is inevitable. The question is not if, but what emergency will be used to justify it this time. Understanding this pattern is the only real protection. Financial crises are not system failures, they are opportunities for consolidation and transformation. Real security doesn't come from trusting bank promises, but from recognizing when the cycle is repeating. The generation that lived through 1914 learned this too late. We don't have to make the same mistake. Think you know who profits from war? Subscribe. I'll reveal what they don't want you to see.